I hear the quiet part most folks miss. Record cash sitting still, dry powder stacked high. Silence isn't nothing. Silence is homework. I wait, I measure, then I move, like a farmer watching the sky before planting. Here's a rule I keep. Don't act until fear turns into a price I can live with. A simple number helps me see it flip from red to green. Not a magic chart, not a secret handshake, just a stubborn gauge that tells me when price stops arguing with value. Stay with me. I'll show you the rule, the number behind it, and the simple way to use both without guessing the market's next mood swing. But here's what you'll get. Why holding cash isn't laziness, it's optionality. And optionality is speed when the window opens. How price wanders away from value, then snaps back like a rubber band. The number I watch, defined in plain English, plus the traps it avoids. A small playbook you can run, watch lists, buy zones, a right-sized cash sleeve, and a clean plan to scale in. We'll face the big objection. Cash loses to inflation with arithmetic, not attitude. I'll walk a quick example so you can see the gears turn. No predictions, just process. Confident in the method, humble about the future. Headlines love noise, record cash, hot CPI, rate debates every hour. The temptation is to always do something. I don't. I aim to be ready. Businesses are streams of cash protected by moats, offered at prices we accept or decline. When the gap between price and value is thin, patience is my edge. When the gap widens, speed is my edge. A big cash pile is not a mattress. It's a spring compressed, waiting for real weather. The rule is simple. Wait until fear has already done most of the work for you. The number confirms it. When it turns, I don't argue with headlines. I act on math. Cash isn't an opinion. It's permission. Optionality means I can say no 1,000 times, then yes once, with size. In con markets, cash earns little. In rough markets, cash buys time, leverage, and terms. Sellers want relief. Liquidity vanishes. Strong hands name the price. Windows open and close fast. Optionality turns patience into power. I'm not hunting the perfect tick. I'm buying the right business at the right discount while others freeze. That's the rule in practice. Don't swing until the pitch is fat. When the window opens, move. Not louder, faster, not reckless. Prepared values the farm. Price is the quote the neighbor yells over the fence. They wander apart, sometimes far. The fat pitch appears when a good business, durable moat, sound incentives, cash that piles up, gets priced for a future worse than it is likely to live. I don't need 20 ideas. I need a few I truly understand. The rule keeps me from forcing swings. The number tells me when pessimism is already in the tag. Think thermometer. Too hot, walk away. Cool, get ready. Cold, get ready. Cool, bring the bat. I don't forecast the weather. I read the temperature and plant when the frost breaks. Markets don't stumble because math is hard. They stumble because people are human. Fear dries, upbids, spreads widen, stories get louder as signals get quieter. Multiples compress first, often before fundamentals change. Later, as nerves settle, multiples expand while the business keeps compounding. My edge is plain. Buy cash flows after fear has done most of the compressing. Then let time repair the multiple. The rule says wait for fear. The number says now the odds tilt your way. Quiet arithmetic beats loud narratives, especially when screens look ugly. Here's the gauge. Owner earnings yield. Owner earnings per share divided by the price you pay, not headline EPS, not EBITDA gloss. Cash a real owner could take out after upkeep and before dreams. I track the yield, then judge the moat and reinvestment runway beside it. If the moat holds, if reinvestment returns stay high, and the owner earnings yield clears my hurdle, that's green. In fear, prices fall and the yield rises. In euphoria, prices stretch and the yield thins. Tie yield to your buy zones. Tie sizing to the depth of the discount. Humble math, hard to fake. Do the work before the storm. Keep a prepared watch list of 10 to 20 businesses you'd love to own. Know their moats, normalized owner earnings, and warts. Set buy zones, not single points. Begin at this yield, lean in deeper here. Build a cash sleeve, size to your temperament. Enough to act. Not so much you itch to act early. Scale in. First bite small, next bite's larger as the yield improves. Write it on one page. Date it. Read it on red days. Panic erases memory. Paper remembers. True idle cash trails inflation in quiet times. But I don't hold cash for yield. I hold it for yield on opportunity. If once every few years I can buy great cash flows at 30 to 40% off, my long-run return can jump more than the points I surrendered while waiting. Inflation punishes still money. Panic rewards ready money. Pay the toll of patience. Cross the bridge of price. Say no to bad pitches. Save your swing for the fat one. That's how cash beats inflation, on the swing, not the sit. Picture a sturdy consumer compounder, wide shelf space, pricing power intact. A storm hits. The multiple slides from 22 to 14. Headlines scream. Funds sell what they can, not what they should. My watch list says fair at 18, wonderful at 14 to 15 on owner earnings yield. I've kept a 20% cash sleeve. Felt silly. At the ugly open, I stage 3 resting orders across my zone. First fill's early. Second fill's on margin calls. Third fill's on a rumor. Weeks later, fear fades. The multiple retraces toward 17 to 18. On a compounding machine. Bought at a pessimism price. Entries never all at once. Let volatility work for you. Sizing. Be big where conviction meets discount. Small where one is missing. Diversify across unknowns, not across names. Stops. Fundamentals, not ticks. Sell when the business case breaks. Moat damaged, incentives sour, secular shift you can't price. Exits trim when price sprints far ahead of value and reinvestment is thin. Don't milk the last drop. Hygiene, one-page thesis, signed and dated. Cadence, watch list monthly, zones quarterly, theses yearly. Simple beats clever. Process beats mood. I don't need to predict the rain. I need a roof and a plan. The rule is patience until fear sets a better table. The numbers owner earnings yield, my way of knowing when price stops arguing with value. Optionality buys me time. The number buys me courage. When the yield clears the bar and the moat still holds, I stop watching and I start buying. If this helped, stick around. Next, I'll break the yields into simple steps and sketch a tracker you can use at home. Educational only, no advice, just the work, done patiently when it matters most.